So, Todd, thanks a lot for joining us. And,
Thank you for having me.
How would you characterize what's going on right now?
Well, I would say that there is a lot of volatility in the FX space. I think we've had markets that have re-rated quite a bit since the beginning of last year. And now we have valuations that are getting a little more challenging. So markets are getting a little more volatile.
Right, so where do we go from here? That's the question, I suppose.
That is the question. I think it depends on where you're looking. Personally, I feel that there's some value in Japan. Some of the exporters are looking quite interesting there, which is interesting considering that you have so much strength happening right now with the yen, and then you've had the intervention last week.
How does that play into what you're looking at in Japan here? I mean, the strength of the yen, we've seen the Bank of Japan come in, Ministry of Finance, and intervene in the markets, coming to really at the moment bolster the dollar against them, but yes, they can't act alone, can they?
They cannot. They can only really provide signals to the marketplace. At the same time, though, the yen has moved quite a bit. In particular, we find some value in some stocks. There's one particular, Makita, which is a manufacturer of hand drills and hand tools. Very, very cheap. It's on 12 times earnings. Things are improving. We see some growth in revenues out of Europe and the U.S.
Right. We've also, of course, got the Fed in the mix as well this week.
Yes,
no
we do.
change expected. But do they need another stimulus package? And if so, when do they act on it? Is it better to act sooner rather than later?
I think with this Fed meeting, we're going to get two things. One is we're probably going to get a downgrade in growth. So as we probably expect, things are starting to slow down between now and the end of the year. But secondly, people are anticipating whether we're going to get some language on quantitative ease. Expectation from Societe Generale is that you're not going to get that language quite yet, but they will probably act within the next quarter or so. So we're moving towards that territory.
What sort of figures are we talking about here? What sort of numbers?
That's a very good question. I think we'll have to wait.
I think we will as well. But overall, I mean, we've also got China as well, and we just keep the theme on currencies and talk about the yuan here. Slight appreciation taking place, but when are we going to see a major move here? When are we going to be allowed to see a major move?
I think you're starting to see it. I think the key was the August numbers that we had on trade, where we had the trade surplus came in at 20 billion US dollars, which was quite a bit lower than the 27 expected. The fact that we had very strong retail numbers, and then we had very strong import numbers, which means that it's actually to China's advantage to allow its currency to start appreciating. So I agree with you, though. When you look at a 5-year chart, you're saying, okay, this is little incy-bincy steps, but I think it's starting to move in that direction. And I think that's interesting, in particular, certain sectors like steel, where you see iron ore prices could come under much less pressure and could help out the steel manufacturers going into the end of the year.
Looking at it's a bit like Japan, and we just had in the lead into out of the top 3 in Asia, those 2 are down. They're in bear market terrain. Yeah. I mean, do you then see a bottom for the Chinese market at the moment in terms of equities?
I think we had a bottom. I think we had the bottom in June. And I think the market's been moving. And I think there's still a little bit left in it. I think there's probably 5 or 10%. And then we're kind of pushing the boundary on valuations. And what we need to get past is this slow patch of growth between now and the end of the year. And then things will probably start taking off a bit better into next year. But we could get into this patch of relative no man's land where things go nowhere.
Yeah, what about the property market? Is that the biggest threat to Chinese growth?
Yes, I would probably say yes. That and regulation, the fact that we had a big market reaction to potential big increase in capital adequacy requirements for the Chinese banks, and you also had potential increase in loan loss reserves up to 2.5%. And that has the market in jitters because they're worried that the credit growth that we've seen in the past pushing the market is going to be constrained going forward.
All right, Todd, well, what about, just generally speaking, what do you do in terms of China? Where do you invest in that case?
Well, I think in a China context, you're still looking at domestic demand and cyclicals. So as I mentioned earlier, steel is a very good area to be in. The auto sector has been re-rating and has a lot of momentum. So it was particularly that retail number in August that people expect to continue through. That is where you focus.
Yeah, and for the flip side of what you're saying about the property market as well, is that stay clear of the banks in essence?
I think the banks are definitely probably hit hit their top valuations because of these concerns on new regulation on capital adequacy. And I also think that this fear that credit growth is going to slow quite a bit going into next year, it means that you should probably focus on some other areas.
Okay, very quickly, Todd, what about inflation? Is that a concern for you in this part of the world?
Not a concern in China, is a concern in India. You just had another set of rate hikes. That's my main concern for India, is the fact that you've had wholesale inflation quite a bit higher than the rest of the region, and they're still tightening.
Todd, thank you so much for coming in.
Thank you for having me.
Todd Martin, he's from Societe Generale.